Thank you all for joining. My name is Philip Gant, Head of APAC Policy and Partnerships here at Global Blockchain Business Council. I'm very excited to welcome you to GBBC's Virtual Members Forum, a webinar showcasing the innovative work of our members around the world. Today, we're joined by Deb Algeo, Global Head of Enterprise at Zodia Custody, to discuss questions institutions need to consider when offering custody services. As it happens, we're filming this on a very important day for digital assets custody, with the US SEC's crypto task force about to delve into these very issues later this afternoon at its Know Your Custodian roundtable. Just a bit about today's session. Launching a digital asset custody solution is not just a technology project. It's an initiative that touches every part of your organization: legal, compliance, risk, operations, IT, client service, and branding. In this webinar, Deb will unpack the critical questions institutions must be able to answer when exploring custody solutions, and the often overlooked pitfalls that can derail even the most well-funded initiatives. Drawing on Zodia's experience powering regulated, institutional-grade custody platforms, we will go behind the scenes of what it really takes to launch your own custody platform and why many institutions underestimate the scale and complexity involved. From technology and architecture decisions to regulatory expectations, operating models, and real-world implementation lessons, this session is designed to help you understand the full picture, ask better questions, and avoid common mistakes. If you're starting to scope out a custody solution, this is the conversation to watch first. GBBC member Zodia Custody is an institution-first digital assets platform backed by Standard Chartered in association with Northern Trust, SBI Holdings, National Australia Bank, and Emirates NBD. Combining deep expertise in financial services, compliance, risk, and technology, Zodia Custody enables institutional investors around the world to realize the full potential of the digital assets future, simply, safely, and without compromise. It operates under registrations and authorizations granted by the Financial Conduct Authority, the Central Bank of Ireland, CSSF, and the Hong Kong Companies Registry. As we begin, I would just like to introduce Deb. Thank you so much for being here with us, Deb. In her role as Global Head of Enterprise at Zodia Custody, Deb leads the development and execution of bank-focused digital asset solutions, including custody, stablecoin infrastructure, and tokenization. With over a decade of strategy, product, and technology implementation experience, she has successfully designed and launched institutional-grade digital asset platforms within Tier 1 banks, ensuring regulatory compliance, security, and scalability. Her expertise spans bridging traditional finance with digital assets, enabling banks and financial institutions to adopt and integrate blockchain solutions with confidence. Deborah has firsthand experience navigating complex banking environments, delivering regulated, enterprise-grade financial products, and ensuring digital asset strategies align with institutional risk and compliance requirements. Previously, she was Director of Innovation at NAB and led Westpac's RLab, where she spearheaded large-scale blockchain initiatives, incubated startup technology applications, and developed RegTech and compliance solutions tailored for banks. Deb's work continues to drive secure, regulated adoption of digital assets across financial institutions, ensuring that banks can evolve while maintaining trust, security, and operational excellence. We thank our audience for submitting so many questions in the weeks leading up to the webinar, and we look forward to delving into them after Deb's presentation. Thank you so much, Deb, for joining us, and I'll now hand things over to you.
Thank you, Philip, and thank you so much to GBBC for having us today. We're always thrilled to be in the room engaging with GBBC and the community. I can firsthand say we've had some really interesting, thought-provoking conversations around the world supported by subject matter experts from GBBC and the community. So thank you for having us, and it's a pleasure to be in the room. Thank you for the introduction. To delve a little bit more into that, I was a customer of Zodia Custody before I joined Zodia Custody. As someone who's also worked in traditional banking for over a decade and been on the other side as a customer and a partner of custody providers, I've seen just how transformational and challenging it can be to operationalize digital asset strategies at scale. So I'm really hoping to bring that unique lens into today's session. Today's session, the approach that I was going to take is sharing 10 rules based on my firsthand experience, so both building digital asset strategies internally and also guiding others to do the same. So you can approach custody as a strategic advantage, not just a technical decision. At Zodia Custody, we understand implementing digital asset strategies does take time. If your organization wants first mover advantage or even staying relevant in such a fast moving space, now really is the time to be building, considering, and starting that journey for your foundation. It's safe to say that blockchain and the blockchain ecosystem has well exceeded Moore's law. The opportunity is huge, and so is the risk of waiting too long. So today, we're going to talk about Beyond the Vault, so 10 rules for getting digital asset custody right. We'll look at critical questions as institutions that we might overlook when building custody strategies, how it impacts every part of your organization, where initiatives typically go wrong, and what it means to build for scale while managing risk, regulation, and revenue. Okay, so we'll jump into the first of the 10 rules. Custody isn't a tech play. It really is an enterprise strategy. So my suggestion here is really defining your business goals first. Custody should serve your digital asset strategy, not just a checklist of technology requirements. Digital asset custody isn't just another IT system implementation. It really is a pillar of your organization's digital asset strategy. It's the foundation for everything. If your organization is treating custody like a technology integration project, you're missing the point. Custody is a business decision. It affects and impacts how you serve your clients, how you manage risk, and how you operate internally. So it really should be built into your digital asset strategy from day one. So for here, I start with the why. Why are you offering, what is your product offering, and why are you offering that? Are you offering tokenized products, supporting crypto trading, powering settlement flows? Only once you know this can you make architectural decisions. So that's everything from hot versus cold wallet, MPC versus HSM, direct versus sub-custody, regulated versus unregulated. So I would choose a partner here that doesn't just provide tools, but understands what it's like and has experience operationalizing this across your organization. My key questions that I would offer you to ask yourself and your business at the beginning or in the middle, or whilst you're on this journey, is why do you want to offer digital assets custody? How will you position your product in the market? Are you targeting new clients, or are you targeting existing clients with digital assets custody? What assets do you intend to hold? How will you manage reserves? Who do you need to consult for new product processes? Does your sales team understand the difference between digital assets and distinctive advantages and risks that come with that? And how are you thinking about training them? What is internal success metrics will you use to measure the impact of launching custody services? My rule number 2 is regulation is not a checkbox. It is a moving target. Regulations are evolving. As Philip was saying today, we have the SEC coming together. So, change is always in the market. So how do we mitigate or plan for this? Compliance must be embedded from day one. Think globally, design flexibly, think compliance by design. One of the biggest gaps that I see in the market is assuming regulatory compliance is a one and done. It's really not. It's jurisdiction specific, it's use case specific, and it's constantly evolving. You really need to build compliance into your architecture from day one. So this means designing for auditability, segregation, regulatory classification across all asset types. My recommendation here is engage your legal and compliance teams early. They're not there to slow you down. They're there to help you scale. Seek partners who have compliance integrated into their product and services, that have experience engaging with regulations and also regulators. Engage regulators early. Don't retrofit later. Look for certifications as a sign of credibility, so SOC and ISO. And ultimately, as your business, think about compliance as a competitive differentiator. So it's a real benefit to your product and the services that you can offer the market. The questions here that I would recommend asking yourself and your business through your journey: are you required to be an authorized financial regulator to offer digital assets custody services? What regulatory permissions do you need in each jurisdiction that you intend to operate in? What activities, so safeguarding, settlement, execution, fall under regulated custody services in your jurisdictions? Do you understand the obligations around client asset protection, including full segregation of client funds from your own? What thresholds, alerting mechanisms will you implement to align with your FinCrime risk appetite? How will you remain compliant with digital data privacy laws in different jurisdictions? And how will you handle sensitive data and transactional data? Do you understand the regulatory differences in custody provision across jurisdictions that you plan to serve? I mean, how will you ensure AML-CTF program is adaptable to changes in global regulation, but also the difference of that between TradFi and decentralized finance? What are the local regulatory requirements for different products? So custody, staking, and yield-bearing products can all have different regulatory requirements based on different jurisdictions. What's your view on coin purity? How to effectively integrate your existing AML KYC framework to enhance risk management, transaction screening, and monitoring? And then additionally, do you have 24/7 compliance coverage to monitor, investigate, and respond to suspicious activity across time zones and chains? My third rule today is risk and control frameworks will make or break you. If you want to offer enterprise adoption, or if you want enterprise adoption, you need enterprise-grade controls. This means clear risk ownership, approval frameworks, and visibility. So this is about thinking about key ceremonies, transaction signing processes, disaster recovery processes, and internal audit expectations. If your risk team doesn't understand it, or worse, doesn't trust it, it won't go anywhere. Map your risks across the full value stream. So think about this not just from a tech perspective, but this is operational, regulatory, technical, liquidity, counterparty, and build your frameworks accordingly. Your risk team will generally want to see procedures that they recognize. So some could be dual control, segregation of duties, key ceremonies, and breach notifications. Oftentimes, what you'll see is risk teams asking about current frameworks, COSO and IST, and then use these to map and communicate your approach. So approaching something that is relatively unfamiliar with familiar frameworks and assessments. Ultimately, your risk will impact, or your risk controls will impact things like SLA. So for example, how long does a withdrawal take? Can I get instant confirmation? I mean, ultimately that SLA impacts your product design and also your client promise. When it comes to risk and controls, I would recommend looking at vendors or partners that understand control design, not just underlying tech. Some of the questions that I would recommend you look at through your journey is, do you have end-to-end processes and controls in place to manage risk across operations, tech, compliance, FinCrime, and digital assets domains? So think about it from sort of the holistic approach rather than a sort of tech digital assets custody focus. What is your firm's risk appetite when it comes to digital assets custody? And if you're unaware of that, how do you help your risk teams to work through that? Do you have a business continuity and disaster recovery plan in place in case of disruption? What are the risk governance frameworks that you'll put in place to meet regulatory expectations and license requirements, as we've covered in the previous rule? How will you and your teams conduct regular risk and control assessments to maintain visibility over inherent risks, control effectiveness, and residual risk? How will you design and execute a secure and compliant key ceremony process, generating a master private and public keys? What are the controls and audit trails and segregation of duties involved in that process? What's your organizational approach to ensuring client assets? How will you test and validate your business continuity plan in real-world stress scenarios? And do you have internal audit coverage for digital asset risk management? And then ultimately, how will you document and track your risk ownership across different business units? My fourth rule is TradFi thinking doesn't actually map one-to-one. This is a transformation, not a translation. So don't just replicate what we're doing in TradFi. Digital assets requires us, to do some rethinking around business models and infrastructure. I know from firsthand experience, it's very tempting to copy and paste traditional processes into this space. But the real value of blockchain comes when you embrace what's different about it. So you're not just digitizing securities, you're reimagining how finance operates. This means very different product flows, reconciliation models, and risk frameworks. Absolutely, working within the market and firsthand experience, use pilots for comfort. So you can start with closer to TradFi processes, but ultimately working with a business transformation and process transformation plan in the future. So use your pilots for comfort, but don't stop there. Some of the questions that I would ask yourself in the business here: where strategy meets change management. So this is about mapping how new operating models can differ and evolve. So ultimately, do you have a roadmap for expanding custody proposition and evolving over time to new value streams over the next 12 to 24 months? As I was alluding to before, when you're looking at what your 12 to 24 roadmap is, that's number 5. Custody is the foundation. Build for value, not just safekeeping. Think of custody like your infrastructure layer. It's not where the value ends, it's really where it begins. Can you add staking, tokenization, settlement, payments? Your platform should be modular enough to enable these. Add value-added services. When you add these, you need to start thinking about interoperability. So when you look at a custody solution, can this connect to exchanges, regulators, internal systems alike? Really prioritize interoperability and an API-first architecture. The right platform will allow you to build on top of your custody services, as I was sort of mentioning before, like tokenization, yield generation, tax automation, and payments. So you really want to be looking at partners and technology and infrastructure that allows you now and in the future to adapt and evolve your business model and your strategy. So I implore you to think about not just building for today's needs, but for tomorrow's opportunity. So custody scalability equals business model scalability. My question that I would ask here is quite a simple one, but it's an important one. But how will you access your counterparties? And what infrastructure do you depend on to maintain that access? My rule number 6 is UX matters even in the back office. This is often overlooked. If your internal teams don't understand the value proposition, can't use the system confidently, they won't adopt it. If your clients find it clunky, they won't engage with it. So good design, good experience builds trust. So clear approval workflows, simple dashboards, mobile-ready tools go a really, really long way. UX is absolutely part of your control framework, so treat it like one. Some of the questions that I would ask yourselves and your business and what you're thinking about for strategy is, will your operations team primarily use UI, APIs, or both to manage custody day to day? Do you want the platform to match your UI? What kind of reporting and analytics will you provide to clients around asset activity and platform performance? And lastly, but definitely should not be overlooked, what is the experience for your internal teams around education, onboarding, and training? My rule number 7 is clients want control without complexity. This is a very overwhelming industry to be entering into as a client. So clients expect real-time oversight, but they don't want to be managing 12 buttons and 12 processes to get what they need. So offering layered access, so initiators, approvers, viewers, and the ability to set thresholds and policies relevant to those businesses, wrap it around in an intuitive experience is extremely valuable to them. This is really how you drive adoption. Give your clients oversight and control without complicating their experience. The questions here that I would be asking myself and the business: what support model can you implement for the platform and client services? What governance workflows and user groups are required for operations? What approval workflows and admin groups are required? What third parties will you need to integrate into the platform for items to support your client, like sanction screening, transaction monitoring, fraud detection? How will your clients access the platform? Is this web? Is this phone application? Or is this a previous system, or they have no access at all? My 8th rule is internal misalignment can and will derail you. So really bring people on the journey. Custody projects fail when teams are not aligned. Education is absolutely key. My advice here is run workshops, translate technical language into plain English description or business terms that they're more familiar with. Absolutely bring risk, legal, compliance, product, and IT together early. Develop that squad, work together in cohesion, create centers of excellence, and steer codes. Internal trust is as important as external trust. Education, from my experience, brings alignment. Misalignment creates blockers, so bring everyone onto that journey early. My questions here to ask yourselves and your businesses: do I have the right people together on this project and on this initiative? Have I established the right cadence, the right ceremonies, the right sessions to be driving this project forward? What internal escalation process exists for operational issues, and how do you want to engage with external support teams? What types of operational audits do you expect, internal, external, regulatory, and how will you prepare for them? We're almost at 10, so we're at 9 now. My 9th rule: secure, scale, succeed. The tech is the easy part. So everyone focuses on key management and the technology, and yes, it is very important. But the real challenge is everything around that. How do you handle client support, escalation, reconciliation, SLAs? My suggestion here is choosing partners that help you to operationalize, not just provide the tech. From my experience working within banking doing this, is we'd often say to ourselves, technology is 10 to 15% of the problem, and how you actually build, operationalize, scale is the real challenge for organizations. So when you look at partners, I would be looking for folks that have, SOC certifications, ISO certifications, HSM MPC grade infrastructure. They're very clear on disaster recovery, breach reporting, chain and custody protocols. They understand how to navigate the complexities of highly regulated organizations. So look for vendors or partners who offer operational playbooks, not just tech. The questions that I would be asking myself and the business through this journey is, how will you manage vendor dependencies and system integrators as part of your delivery tech stack? What's the plan for service continuity if critical technology vendors fail or exits a market? How will you manage software releases, updates, hot fixes, and jurisdictions that might disrupt client operations or breaching regulatory constraints? My lucky last rule here is build a strategy for tomorrow, not just for today. The market is absolutely evolving fast. Tokenized assets, stablecoins, cross-chain interoperability, these are no longer future concepts. These are here today and happening today. Build a solution that can evolve, choose vendors investing in R&D, look at how you'll support new asset types and regulatory structures. Your future scalability really does depend on the decisions you make today. Choose solutions that support tokenized assets, stablecoins, future interoperability, not just what's in scope for you today. Think about partners that can support, longevity with your strategy rather than, a tech-first solution for what you're working on today. Some of the questions that really help to, interrogate this thinking is, it's not just today, it's tomorrow. So what's your approach to onboarding new regions and new product lines while maintaining consistency in governance, auditability, and platform control? How will you scale your delivery model to support institutional clients with bespoke needs or operational risks? What's your timeline for implementation and what does good look like? Have you considered your commercial modeling? Do you have a pricing model for digital assets custody? And then as you add more services, how are you thinking about charging for ancillary services like staking or off-venue settlement? All of the value that will sit on top of your custody solution. So the questions here are questions that I've learned delivering this within a highly regulated environment myself, but also working with the market. I absolutely know there's a lot there. I assure you, this is all possible. This has been done, this is being done, and it will continue to be done. At Zodia Custody, we've been working with our clients and support our clients throughout this process. So not just tech, but operationalizing this in their businesses. So I just want to ensure that we know that this is possible and we are here to help. Custody really is the starting point. It's not the full story. As digital assets evolve, your ability to move quickly, securely, and confidently will depend on the choices that you make today. Custody really can be a blocker or a competitive advantage, and the difference really lies in your approach. So my recommendation is define your strategy, invest in the right foundations, build with partners who think long-term. So I hope that these rules guide you, and my experience has been supportive for your journey. I'm always happy to connect, share insights, or dig deeper on any part of what we've covered today.
Thank you so much, Deb, for sharing those rules and sharing Zodia's deep experience with designing and launching institutional-grade digital asset custody solutions with partners across the world. And thanks so much for empowering us all with this toolkit. I really appreciated the final words of encouragement as well. We've had, as I mentioned, a number of questions come in over the past few weeks, and I'd love to pose a few to you and the team with the time we have left. In this first one, let me read it out nearly verbatim. It's a bit longer. It's that the global custody services market is highly concentrated. The top 10 players, nearly all banks, make up half the market share. How do you see the market dynamics changing with crypto custodians? Will large banks crowd out or buy out these crypto custodians eventually? What about at the country level? Is it profitable for domestic banks to start their own digital assets custody services, or should they sub-custody it?
Great. Thank you, Philip. This is actually a really important question to answer that I do come across quite a bit. My first remark is traditional global custody is dominated by a few players because of trust, regulation, and infrastructure at scale. But stepping into the digital asset space, there is room for digital assets custody outside of these big global custodians. The ability to be agile and specialized and still scale with compliance, but being able to be nimble enough to do that is a huge advantage. When I think about these sort of big global custodians or banks, what I would say there is banks might actually sub-custody or acquire specialists. So I think that's everything from understanding that it's a very long journey for highly regulated businesses to start at day one. So what we see is that a lot of these global custodians and banks are actually looking to these crypto custody specialists existing in the market for their expertise on regulations in the space, their expertise on technology in the space. So we are actually seeing a lot of movement in that market coming to the experts in the industry that have gained 5 to 10 years experience to come and help them on their journeys. So I guess there is a role for global custodians to enter this space. I mean, it's the trust that we have in those custodians, but there's room for crypto custodians for being agile. There's room for crypto custodians in the space to offer their services and their expertise to these larger organizations. I think a lot of national banks may find it more viable to partner a white label rather than build proprietary solutions, which is highly complicated and complex within organizations with the sort of controls and levels that you have in a big organization. So I think long-term hybrid models will emerge, where there's trust, brand, interrogation of capabilities. I will say as well, I think that participants in the market that work with regulation will be advantageous in the long run.
Thank you so much for fielding that one. And I should say that a number of these questions, they've come in before the session, and so your rules have really anticipated a number of them. But let me launch into a few. One is, how can organizations ensure interoperability between their custody solution and other parts of the digital assets infrastructure? And here I'm thinking a lot about, I guess, a follow-up on your Rule 5.
Yes, absolutely. Yeah, Rule 5, bit of Rule 6. So I think even if we jump to Rule 1, plan your strategy. What are the solutions, the assets, the outputs, the measurements that you're sort of tracking with that strategy? Think about it in that 12 to 24 month roadmap strategy. So what do you need today and what do you need in the future? So I would think about looking at partners that are interoperable with what I would call like value-added services. So what is your business model that sits on top of custody? So it's everything from exchanges, staking, reporting, settlements, and other DeFi protocols. So looking at platforms that have existing partners that already operate within the platform can be hugely beneficial and make it easier in the long term when you're trying to integrate more services with very simple API structures. I would also look at the use of APIs, as I was alluding to before, but also making sure that these providers do use standards like ISO and multi-chain infrastructure. So I think to sort of wrap that up, look for modular platforms that will evolve and allow you to grow without the sort of burden of huge change management and technology transformation programs within your organization.
I see. And I really appreciate that answer, because it sort of anticipates a few of the threads and the questions to come. And let me launch into another one. Could you speak maybe a bit more? I realized you covered this in a number of your rules, and particularly Rule 8, but could you speak maybe a bit more to the most common strategic and operational missteps that you've seen institutions make when approaching custody? And also maybe to some of the best practices that you and your partners have developed on these fronts.
Absolutely. I was saying this before in the process of elaborating on the rules. From my experience, I remember we used to say this between our team, that like technology is not the challenge here. Technology is the opportunity here. And in fact, when you're building out your custody approach or your digital assets approach, 10% of that is technology. What I would offer as a pearl of wisdom here is that bigger picture thinking, thinking about all the other facets that are involved in that process, and working with experts in the industry and within your organization to bring that together and work together. Something that I found directly valuable within when I was working in implementation at a regulated entity was actually mapping out the value stream and all the different things that you need to do, and then looking at partners and how they support you on that value stream. So what you'll actually challenge yourself with is, can I work with partners that can support me on more than 5-10% of that value stream? And can I draw on their expertise to help me with risk, compliance, legal? Like, what is their technical know-how? Have they done this before? But I think that value stream mapping and understanding what your sort of change transformation is in the organization, and then mapping partners against that will give you a real indication of the differences in the market between like a tech provider and then those that can help you with a lot more of the challenge that your organization will face.
Let's see. Yeah, thank you so much. And I guess that speaks to another group of questions that have come in around, partnerships and unlocking the value in the earnings potential in digital assets. And so I guess as the industry continues to, realize that, and that the technology fundamentally continues to realize, what some of this earning potential is, how does that value stream mapping and that partnership mapping work, right? Because, that the earnings potential itself is such an evolving journey, right? Almost day by day.
Yeah, absolutely. I think that there are existing approaches to this, but I mean, my experience would be looking at your strategy and mapping out the outcomes that you're wanting to achieve. And then you can do indicative correlation of commercial value for each of those features or service offerings that you have for your customer. I mean, ultimately, that could determine the prioritized lens that you offer that. So what is client demand? And then where are you sort of seeing the most ROI in that process? So, I mean, there's definitely established ways to look at that commercial value beyond custody. But I think ultimately, as you're saying, Philip, this changes. The services change, how you can offer that to customers change. So again, it comes back to your investment in that infrastructure and that technology is really important, and being able to have infrastructure and technology that proves that they can integrate new value mechanisms, proves that they can work with really good partners within that. But then you have that scalable and adaptable technology. So wherever you want to take your business strategy, coming back to one, and even if it does adapt, that partner themselves is thinking about that, and that partner themselves is going to work with you and how you're thinking about those new business models.
Absolutely. Thank you so much. And we've got another sort of set of questions that I'd say circle around regulatory experience, regulatory expectations, and global standards. And I realize you've touched upon this in a number of your rules, 2, 10, and others, and some of your comments just now. But what are some of the key ways in which custody requirements differ across jurisdictions, and what are best practices for navigating these cross-border obligations?
Mm-hmm. I mean, let's repeat it because it is so fundamental, as I was alluding to before, when we look at what's happening in the market and will things consolidate. I think it is extremely advantageous to be working within the rules of different jurisdictions. I mean, ultimately, as an industry, we want to be providing safe and secure technology and solutions to the industry. So, I mean, working very closely with regulators is fundamental. Internally, I'll always kind of come back to the saying compliance by design. So, involve compliance, involve risk from the get-go. You want to work with experienced partners. You want to think about compliance teams that specialize in digital assets. I would recommend working with flexible technology that allows you to build custom policies, technology that allows you to integrate different third-party providers that are adaptive to, different regulations in different jurisdictions, and have flexible controls and allow you to alter your controls as your risk appetite grows or reduces. So I think work very closely with the regulators. When consultation papers come out, support them, work with the regulators on that. I think when we look at different regulations, different jurisdictions, I mean, there definitely is quite a variance between them, especially, asset definitions and custodian obligations. But if you establish a best practice of modular compliance, consider regional sub-custody and monitor pending regulations, then that will really build out your organization for the future. I mean, we've talked about 12 to 24 month roadmaps in your organization. I mean, there should be a stream there for regulation too. So what does different regulatory environments look like, and changing where things at with consultation and building that into your roadmap. I mean, it's about growth. This is a huge opportunity for organizations. So I would say think globally, act locally, and just understanding that regulations are different, they change, and that one custody model is not always going to work everywhere.
Exactly. I really appreciate that, and I appreciate your sort of underscoring that the fundamental truth in the model. And I should say, your Rule 4 was really fascinating. I love the way you put it. Like the TradFi thinking doesn't apply one-to-one, and think of this as a transformation rather than a translation. So, I guess to follow up on that previous question, these are oftentimes institutions that are used to thinking about compliance by design, working very closely with regulators, working across many jurisdictions. But as they transform rather than, translate, as they enter digital assets custody, as opposed to traditional custody, are there regulatory expectations or experiences or nuances that you found are often underestimated, or, just sort of have a steep learning curve, even for really experienced institutions?
So I would answer this in two ways. My first way is actually a bit of a positive spin. I think that we underestimate how great this can be for risk and compliance within our organization. If you work with this technology correctly, this can enhance our due diligence. This can enhance our financial crime, evaluation, investigation, and reporting. So I think there's a huge benefit that maybe gets lost in translation because it is such a new technology and a new thing for our risk and compliance teams to evaluate. So I think keeping that as the long-term outcome, that this could actually be really prosperous and, highly valuable to the market, and creating a safe market. And then the second thing I would say there is that education is really important. So that is educating your internal teams, that is educating regulators, and working together with regulators. So we're seeing a lot of markets have a really ecosystem approach. I mean, you could see this, Australia and Hong Kong are two that come to mind at the moment, but where communities are coming together and working with regulators to establish what the best practice principles will be, but also learning about the value and future of what this technology could do for organizations.
I see. Well, thank you so much. And to that point, I really appreciated the stress you placed on education, and then looking internally, and thinking about this as a way to really upgrade the capability of the organization more generally, and to involve people as broadly as possible. And this question has come in, and I think you'll probably have a lot more to say on it. Are there internal teams that you find are typically overlooked during this custody planning, but that later become critical to success?
So I think there is building the thing. So building out your product or your digital asset solution, and then there is launching it. So when you're building it, it's so important to be bringing risk, compliance, legal, like all those decision makers that are, supporting you to build a really safe product for your clients. So I think about that. And then when you go to launch it, I think sometimes what you might overlook is treasury, tax, audit, corporate comms. There's quite a lengthy, there's a difference between proving out your technology and establishing what your solution will be than the steps to for a new product launch process. And that actually requires quite a, high level of engagement from others around the organization. So I would kind of think about those two and the groups that are really important to make those successful. So bring your stakeholders in early. I mean, obviously, when you're building the thing, you have a high frequency engagement with that group, but also don't neglect the stakeholders that you need to launch the product as well. So, I mean, maybe not such a high frequency while you're doing the building and the testing, but I would keep them educated and supported and on the journey. That will be hugely impactful for, your end-to-end process. So bring them in early, and then they can also help you manage any downstream impact. Treat custody as a company-wide initiative and not just a technology project.
So, with the time we have left, I'd like to ask you just a couple last questions and then see, for your consideration, please feel free to answer them, as you wish. But is there a question you wish people would ask you, that they don't the most? And here's another one. What would Rule 11 be, if you were to continue on and maybe give us a bonus?
Okay. I actually think the question that I would like to be asked would be like, how do I start today? And I'll preface that with that question is being asked now, and it kind of relates to my 11. If 11, the thing is, so let me take a perspective from, a highly regulated large organization. Building technology and launching these business is a very careful process. So I'll give an example of a bank. We have, banks have been keeping our assets safe for 100, 200 years. So we're now asking them to, add a new asset class, and it's compelling, but it's challenging. So understanding, I guess, as an industry that is a very difficult process. And I think as an industry, sort of us coming together to support that. So with that in mind, I think my rule 11 would be that you really need to start now. So as a highly complex organization, to be able to launch digital assets, custody, and beyond, your process really needs to start today. There is an ecosystem that can absolutely help on this journey. It has been done before, and it's going to continue to be done. But also thinking about that rule is understanding the outcome of we have to continue to keep our clients safe and our client assets safe and provide the best possible service around that. There really, really is a very governed, bank-designed way to deliver this. So what I mean by that is there is stages that exist in this journey that can help you bring teams along and, start to test operations and processes without exposing too much risk to the organization. So I would implore organizations to be really seriously looking at building this now, understanding that the industry has a really great approach that walks through proof of concepts and pilots and educations and workshops, etc., that allow you to move through the stage gate approach that highly regulated institutions have. And I guess the question being like, what do I need to do today so that I can offer digital asset services to my clients in the future?
And once again, I really appreciate the, empowering comments at the end about how, this pace, right, and this way of thinking, it already exists, and it's just a matter of taking advantage of it. Final one, if I may, is that we're just kicking off the day here in New York. What new locations will Zodia Custody's famous breakfast bites come to in 2025?
I think it extends well beyond breakfast bite. So, I feel like you can find us everywhere at the moment, Philip. We're kind of all over the world, but I do know that we have the team heading to Token 2049 in Dubai. So if you're around, let us know. There's a whole group of us there. We'll be at the event. We'll be at side events. And so we're doing some things in the industry over there. So please join us.
Perfect. Well, thank you so much. Thank you, Deb. Thank you, Zodia Custody, for such a thoughtful and empowering session on how institutions can begin to approach their exploration of custody services offerings in a more comprehensive, systematic, and successful, ultimately, manner. And we look forward to the conversations that this sparks and the solutions enabled, and to continuing to learn from your work at Zodia. Thank you all for watching, and thank you, Deb.